Volume is another indicator we're going to cover in this series of tools used by chartists when they trade in the stock market. Even if you've been trading for a while, these simple and short refreshers can really help. So I recommend just giving it a short view. Volume is a measure of how much an equity has been traded in a given period of time. And it's a very powerful tool, but often overlooked because it's such a simple indicator. Here you can see what volume will look like on a standard chart. Here's what it will look like on my charts. Here you'll also note the previous indicators we've covered in this series so far: RSI, moving averages, health-based trends, and MACD. Moving on, volume information can be found just about anywhere, but few traders or investors know how to use it to increase their profits and minimize risk. There's a battle between buyers and sellers for the best price for the best price on every time frame, all continuously. And this produces movement while the longer-term technical and fundamental factors work themselves out. But every time you want to buy a share, there has to be someone trying to sell, and vice versa. So using volume to analyze stocks or any financial asset can really help maximize your profits and also reduce your risk. Well, let's review some basic rules for volume. You can utilize volume to measure the strength or weakness of a move by an equity, and as traders we're more inclined to join strong moves and take no part in moves that show weakness, or we may even watch for an entry in the opposite direction of a weak move. So these guidelines do not always hold true in situations, but they're a good general aid in trading decisions, so keep them in mind. A rising market should see rising volume. Buyers require increasing numbers and increasing enthusiasm in order to keep pushing prices higher. So increasing price and decreasing volume show lack of interest. And this is definitely a warning, can be a warning of a potential reversal. This can be hard to wrap your mind around initially, but the simple fact is that a price drop or a rise on a small amount of volume is definitely not a strong signal. A price drop or rise on large volume is a stronger signal that something in the stock has fundamentally changed. But here you can see that we have a rising price action on decreasing volume, and then we get the sell-off following. In a rising or falling market, we can also see exhaustion moves. These are generally sharp moves in price combined with a sharp increase in volume, which signal the potential end of the trend. Participants who waited and are afraid of missing more of the move pile in at market tops, and they exhaust the number of buyers. At the market bottom, falling prices eventually force out a large number of traders, resulting in a lot of volatility and increased volume as well. We will see a decrease in volume after the spike in these situations, but how volume continues to play out over the next days, weeks, and months can be analyzed by using other volume guidelines. But if you want to check here, this is just a basic example. We see we're in a downtrend. There's a large candle, and it's completely exhausted with a large green candle and increased volume. When that signals the end of this trend, we have an uptrend. We see another exhaustion situation, a boom, a large increase of volume, and a sell-off. After a long price move, higher or lower, if price begins to range with little price movement but a lot of volume, often it indicates a reversal as well. And so here we have an example. There's a long price movement. We're going down, down, down. Yes, we did get a little bounce, but overall this is down. Then we start trading this range for a little while, and it's on good volume. So then at the end of this range, we see decreasing price action on increasing volume. Then you see here, following this up, that we get the reversal that we were looking for. As an important note, though, volume should be looked at as relative to recent history only. So comparing today to volume 50 years ago gives you completely irrelevant data. The more recent the data sets, the more relevant they're likely to be. There are many different volume indicators available. We'll begin covering some of them this week in our video series. Volume is an extremely useful tool, and as you can see, there are many ways to use it. There are basic guidelines that can be used to assess market strength or weakness, as well as to check if volume is confirming the price move or signaling or even a reversal. Indicators can be used to help in the decision process. But in short, volume is not a precise entry or exit tool. However, with the help of other indicators that we've taught you, entry and exit signals can be created by looking at price action, volume, and the volume indicator. This should give you a basic understanding of volume and how it can be applied to add to an effective trading strategy. This is a very important indicator that gives professionals and traders the insight for making the right decisions on both sides of the market. And like I said, this week we'll continue to move through several volume-based indicators to help you learn how to improve your trading using volume on top of our momentum indicators that we've already covered. If you'd like to come to a noise-free, friendly, and productive environment to share charts, learn, and trade with other traders, please feel free to come to our website for a 5-day free trial. I think that you will love it.